Right, now we're going to do the section C on this question, which is the pre-populated spreadsheet, right? So this is what we're going to start. Let me take them off first. Right, the pre-populated spreadsheets, I would break this down into two, right? In order to make things easier for you to understand. That was the purpose, right? So you just need to, I understand this is one of the areas that you need to be focusing on, right? So let me first help you out how you would make decisions on these pre-populated columns. How are we gonna have the columns, right? So the pre-populated spreadsheets, the starting point that we noticed, the dates were not the same. So we have only done workings up to the acquisition date. This is the reporting date. So far, when I completed my section A, all the section A is only for 1st Jan 2017, right? So the initial recognitions, I would first bring these figures onto the pre-populated spreadsheet. These were initial recognition numbers, right? That's my first step going to be. I would not touch the activity B first. Why? Because at the same time, because activity B took place when it took place at the reporting date, right? This event only took at the reporting date. See here, this only took place at the reporting date. So I don't have to worry at the moment about this, right? Because when I need to do more work on the reporting date, so initially I would only focus on 1st Jan 2017. There were numbers missing. We did not do it properly when we did the earlier consolidation. So those numbers need to be brought in to the pre-populated spreadsheets first. That's the first part of the video. Second part of the video is where that we would try to consider for the 31st of December 2017, what would be the other adjustments we need to do because 1 year has completed. Then we would bring. So the columns, the order I'm going to present, it will not be the same as what you're going to find in the ACCA solutions, right? So I'm presenting it in a way that you would find much easier. Logically, you would reach out this, right? You complete this, right? So the first part here, I would, when I look at my first working and when I look at my first working initial recognition date, you see there is a deferred considerations. And we were told there was no entry was made with respect to deferred considerations. And also we made note of this. So goodwill will be debited, credit going to be deferred consideration liability. So we said earlier when we did on the 1st Jan 2017, we need to increase the goodwill and also we need to increase the deferred consideration liability. This is not deferred tax. This is deferred consideration liability, right? Okay. Now I need to take this figure to the pre-public. So my first column gonna be deferred consideration liability. That's on the pre-popular spreadsheet. This is what my first column gonna be, right? I've already done it in order to save time for me, right? Otherwise, me typing with my spellings, it would take ages to finish. So that's my first column. With I had deferred consideration liability. You know now how I got this column, right? How I got this column, and also make sure that you have the side copied across, right? Right. So that's done. So I need to record first. What was the double entry? It was an increase in the deferred tax liability. So we said deferred tax liability need to be increased. Debit gonna be goodwill because these are liabilities. Liabilities would shrink the net assets. When the net asset get smaller, we have higher goodwill, right? So debit goodwill. So that's my goodwill account, right? So the debit goodwill. So this is my goodwill account, right? This is my goodwill account. So I would debit the goodwill. So I'm going to have an increase of 31.7, an increase of 31.7, which was simply because of goodwill, deferred tax, not deferred tax. I keep saying because I want to say something about deferred tax, right? So this is about deferred consideration liability, right? This is deferred consideration liability. I hope it's clear, right? So where it's going to be the double entry, the next entry going to be then. So the next entry for this going to be, credit deferred consideration liability, deferred consideration liability. I have this column for you to say show something. Now this is the ACCA system. I mean, it is not easy. I understand as a present. I've seen people who have done this for 25, 30 odd years making errors when they present. It's not easy to present and and then to do a calculation. You know, you would, of course, you would make silly mistakes, especially looking at those columns, right? So I think what happened there, she has recorded this as deferred tax. It is not right, right? It was a mistake. So, you know, this is not deferred tax. 31.7 is not deferred tax. And this 31.7 should come under current liabilities. Why this is current liabilities? When this is due? This is due in 31st of, we were told we would pay in 31st of December 2018, right? 31st December 2018. And what is this date? 31st of December 2017. So in 1 year, you know, is not more than 1 year. You know? So 31st of December 2018 is not more than 1 year. So this deferred consideration liability for this reporting date must be a current liability. So we have to do this under current liabilities, but not under deferred tax. It is not deferred tax, right? It is under current liabilities. So we would have an increase in deferred tax liability, 31.7. I hope that's clear, right? And repeat again, you know, I even have done many mistakes when you record. It's not easy to record and speak, record, and then making sure that you are, you know, you lose concentration sometimes, right? So it's an accidental mistake that she has done. She is an expert tutor. I've seen on many videos in ACCA. She is the person who normally do mock debrief, and there's a lot of videos from her. So it's maybe a silly, you know, just a careless error. You know, when you scroll down, you will not be able to see the columns. That may be why that the mistake was there, right? So we understand it. Let's move on. So that's the first one, right? So we made note of the first. So remember what I've just done. I'm making sure those initial entries which not gone in to the pre-populated spreadsheets, I'm just bringing them on. So I'm standing at 1st Jan 2017 only now, right? So moving on to my next entry, when I look at, so that I've done this, then I also know about these two adjustments, and I've already made note of them. This fair value was not there. So I need to bring these fair value adjustments. What I need to bring, my first one, I said, I need to increase the factory by 30. When you increase the factory asset would increase. Remember, when a transaction, all the transaction that takes place at the acquisition date, when you buy a subsidiary, one of the entries would go directly into the goodwill account, right? So no profit and loss account here, it would go to the goodwill account. So factory need to be increased 30, goodwill would be reduced by 30. Then you logically think why goodwill need to be reduced. So when you increase the factory, you see the net asset increases, isn't it? That means when the net asset get bigger, when compared to the considerations that we have paid, so that the goodwill gonna be smaller. So when the net asset, the figure that we're gonna deduct it. So when the net asset increases, it would reduce the amount of goodwill. Goodwill will decline, right? So we'll have a smaller goodwill. So debit gonna be the my next heading gonna be factory fair value adjustments. That's my next heading here. Factory fair value adjustments is my next heading. That's how I decided what heading that I'm gonna have. And so under that, I would have, again, I can copy this across to the next line. That's done. Now I would have this, I would have here, the amount was, what was the amount? Factory 30, right? So I know the factory figure need to be increased by 30, and they haven't given the breakdown. They only have given me the plant property. It's a plant property. So I need to increase this by 30, right? That's an increase. Debit the factory, which is 30. You know, I'm just, you know, to make much easier for you to understand, I'm just making sure this the additions are given in green, right? And then the deductions are given in red color. So that, right? And then the next one is going to be goodwill. You know? So it has to be, goodwill need to be negative 30. You know? So we said it clearly. It has to be negative 30. Deductions in the goodwill because of that fair value adjustments. That's done. Remember, I'm only dealing with as at 1st Jan 2000, as at 1st Jan 2017. I haven't gone to the reporting date yet. It's much easier to do this way rather than you bringing all the other adjustments. So you lose track how it is being done, right? And then the next one, I'll move on to my start date. I've dealt with this, and then I can also see there is a deferred tax adjustments. And so we made note of the deferred tax. I explained you how the deferred tax work according to the IAS 12. And we said, you know, this figure, this means the provision for deferred tax. What should be the closing figure, right? The closing figure, we need to balance it to be 6 million, right? And there is no opening balance there. So the charge also need to be 6 million. But here, the charge would not go to the profit and loss account, you know, because this was at the acquisition of a subsidiary. So that deferred tax need to be dealt with the subsidiary. If you go back to your IAS 12 notes, you would find this. Any deferred tax that takes place during the acquisitions need to be dealt with uh, the goodwill calculations, right? So we know deferred tax is a liability, so we need to increase the liability by 6, and then the goodwill need to be increased. Think logically, why then the goodwill is increasing? And this is a liability, and a liability would shrink the net assets. When you increase the liability, net asset would go down. When you have a smaller net assets now, consideration amount is higher, the net asset is smaller, so you get a higher amount of a goodwill, right? So that's clear. So we need to go and add the goodwill. So my next heading going to be deferred tax factoring, because deferred tax liability, that's my next one going to be. Heading going to be deferred tax liability. So that's the reason why I have this heading. Next is going to be deferred tax liability. Right now only I have deferred tax liability, right? So the earlier one is not deferred tax, it is deferred consideration. That was a slight error in that solution. And so I've done this there. So I'm just gonna uh, record this. So how much was it? 6 million. So 6 million gonna be what I said, it would increase the goodwill. And goodwill would be increased by 6 million, right? That's I've done. Goodwill has increased by 6 million. That's being recorded. At the same time, the deferred tax liability would increase by 6 million. So deferred tax liability, we have the deferred tax liability now here. This is the deferred tax liability, the last column here, right? I would put deferred tax liability as 6. So I can simply add against 56. I would put this, sorry, right? Against this 56, I would add another 6, right? Which is the deferred tax liability. So these are the first 3 steps. When I've just done the recording, are there any other figures that I need to take on board when I consider my first steps? If you look at the first steps, right? If you look to the, go to the A, right? All the other informations I've recorded this, right? There's one more, you know? So I've recorded this, and I've recorded this, and also I have recorded all the other informations, right? And there's one item with respect to the NCI, right? We recognize the NCI at 41.6, right? You could see what they have done right here. So when you look at the NCI figure, there, and what they have done NCI, they only recorded the NCI as 32. We have no problem with the cash. Cash has been recorded. NCI has been recorded only at 32. But we found the NCI to be how much? NCI to be 41.6. So if I just make note now, at the initial recognition date, right, at this date, and I know the NCI, I need to, in the pre-populated spreadsheet, right, it was only recorded at 32, right? But current figure is 41.6. It was only recorded at 32. So the difference between these two, right? This is the difference between these two was missing in the pre-populated spreadsheets. 41.6 minus 32, right? So this is the figure 9.6. This is missing from the pre-populated spreadsheets, right? So I need to add these 9.6, and so double entry going to be what this was initially. This is initially at the recognition date, acquisition date. So because it is at the acquisition date, and you know, anything on the acquisition date related to subsidiary, we need to bring the goodwill into it, and we need to increase the NCI. NCI is a liability, so we would have credited the NCI by how much? Only by 9.6. That is a missing number. And then what we're going to do, debit, we would debit the goodwill account. How much? By 9.6. Now again, you know, if you apply your knowledge of double entry, you would know what would happen. You know, when the goodwill, when the NCI increases, goodwill also would increase, right? So we need to increase this. We need to increase the NCI. We need to increase the goodwill. So that's my next. So my next column gonna be the NCI, right? So because I've got the NCI here, my next column here is gonna be the NCI. My third column, the fourth column gonna be the NCI, right? Again, so far what I've done, I've only done up to, all these were only up to the acquisition date, 1st April 2000, so 1st Jan 2017, right? So I know what to do with NCI, and it was 9 point, with respect to NCI, 9.6, right? So I need to add the NCI goodwill first, right? So goodwill gonna be added by 9.6, and then the next bit here, right? So the next bit here, the NCI would also need to be added. We have the NCI figure here. We have the NCI figure here. NCI is also need to be added by 9.6, right? That's NCI also need to be added by 9.6. That's also there with the NCI figure being added by 9.6, right? That's the first part that I have done, right? So it's much better. I'm breaking it down. So far, the video one, I've only covered up to this, right? Doing the initial bit on the pre-populated spreadsheet. So this is the initial recognitions. Now I know that pre-populated spreadsheet is not for the initial date. It is for 31st of December 2017, right? Now what else I need to do? What else has happened within these 12 months, right? Certain charges I need to bring on, and that's the I would cover them in the second part of the video, right? Thank you.